Today we're diving deep into the golden rules of meme coin trading and risk management secrets so that you can cash in big during this bull run. It's straight from my full course, and it's the one that gets the most love from my community because it is a game changer. Now real quick, by now you should know my bot recommendation for trading meme coins on Solana is Axiom Pro. Guys, you want to make sure that you have faster fills, lower fees, and it's the only bot that's paying you Solana as you trade, along with a bunch of other tools. Check out my other videos where I go a little bit more in depth on how to use Axiom Pro. Now, it is invite only, so click the link in the description so you can lock in on that access code before it's gone. Oh, and if you're not a part of my community yet, you're sleeping on some serious alpha. Guys, we have a full meme course university that goes from A to Z on everything you need to know on trading meme coins. On top of that, we have a like-minded community where we share alpha, we share our wins, and we're basically just leveling up together. So don't miss out on that. Right now, it's no catch, completely free. You could claim that in the link in the description as well. All right, guys, enough hype. Let's dive straight into the video. This is gonna be probably one of the most important videos that you ever watched on mindset, risk management, so that you can live to trade another day in the markets. Let's dive right into it. Let's just get into the crypto rules. I want you guys to really take notes on this one. This is probably one of the most important videos. So crypto rules. Now, usually, like I said, you want to start with a decent port size. Port stands for portfolio, 5 to 10 SOL. If it's less, it's okay. If you want to start with 1 SOL, sure. You can do, like, a lot of people do 1 SOL challenges and stuff like that. But usually once you're limited, with 1 SOL with fees and stuff like that, if you're getting like 0.05s, 0.10 trades, like you got to get in a real runner to make some money. So you're not going to be able to really get like scalp and kind of just be scanning and trading all day. You got to like sit on your hands and wait for alpha. For sure. I mean, you should do that anyway, but a lot of times when you first get into trading, you want to kind of catch some quick flips and stuff like that. Then you want to get in with 5 to 10 SOL because you could catch a lot of plays during the day. Get in with like 0.5 to 1 SOL and flip. And if you're getting good plays, good entries, you could flip that in a few days, in a day, really, with the right play. That's just my recommendation. Now, when you first start, just watch new players all day. No tools, no anything. Just go on pump vision and just watch. Just scan. Your eyes are going to get adjusted and you're going to see what's LARP automatically after like a few hours. You'll kind of see what the meta is kind of starting to be. You'll see a bunch of AI. AI is always kind of mixed in these days. Now, once you do this, this is how you'll train your eyes a little bit. It's going to take a lot more work than just a day of just scanning, but start training your eyes on what to look for. Now, don't trade more than 4 pairs at a time, especially if you're new. It's okay to get 1, 2 pairs, 3 pairs. Now, you don't want to get in 1 pair and just fucking stare at the chart. This is what a lot of people do. They're in 1 trade and they're just staring at the chart. They're not even able to scan anymore. Don't be that person. That usually happens if you're over leveraged or something like that. You want to know what's going on and be excited about the trade, but you'll be able to see what's going on, especially on Bullux. It'll show you like if you're up or down on trade in the top once you're in a trade. So, kind of keep an eye on it. Obviously, you want to manage your trade, especially because things can go south so fast. If you did your research and you know it's a runner, hold it for a little bit, see what happens. Now, always check, has this trade been done before? This Hika, whatever, obviously this is a bundle and it's up only, it's going to crash. But let's just say that we probably thought this was real. One of the easiest things that you can do that could save you so much money is just check if it's been done before. Hika. And boom. Now you know not to get in that fucking trade. Check if it's been done before. You could save yourself so much. Now, when you're first starting, especially like if you're on a 5 to 10 port, like you want to build that to like 100. So just take profits at 2x to 5x. Always take initials. A lot of times, like, don't get me wrong, a trade, if you're in a good runner, it could go 50, 100x. And if it's really running and you see the volume, okay, then you could scalp out of the trade and just kind of like DCA out. DCA stands for dollar cost average, which means like instead of full porting out, full port means like when you take your full portfolio out. Full porting out means like you just one clipped the whole thing. Like you just took 10 SOL out at once. Let's say you put in 1 SOL and you're up 10 SOL and you just full clip out the whole thing. If anything, you could take out maybe 3, 4 SOL and then maybe it goes up another leg up. Then you take up another 3, 4 SOL. Like you got in here, you're up here, you take out initials. Okay. And then you're up again. You could take out, maybe another 25%. You're up again and you take out another 25%. That's probably the best way to do it because then you're safe. You're not losing money because if it just dunked, at least you secured a profit. And even when it gets back to your entry, you're still up. And then you could decide what you want to do from there, but you're safe. You know, you want to live to trade another day. That's the biggest thing. And that's what I mean. If there's a volume, like just clip out slowly like that. But a lot of times, like you get in trade, if you're 2-3x, bro, book that profit and move on to the next trade. Don't even think about it. Don't get caught up about it. It's probably going to run up crazy still. It's probably not, but get used to just moving on. There's always a new play every single day. There's 10 mil, 20 mil, 100 mil runners every single day. It never ends. You have to have an abundance mindset. A lot of this shit is mindset. There's always more. So take your profits, move on. You know, that's how you're going to get to 100 SOL. When you're at 100 SOL and you want to hold something for 50x, 100x, okay, that's a different story. You could do that. Now, again, priority fees, you want to usually keep them around 0.02. If you're just starting or whatever, like use the settings that I recommend or the recommended settings on Bullx. You see it up here. You should be straight with that. Use MEP protection in the beginning, especially if you're at 5-10 SOL. Guys, don't be afraid to buy the blood. That kind of goes along with this, like don't top blast. If you see a trade that has potential, like let's say I wanted to get in, let's see, red note, whatever this is. Like a lot of people FOMO into trades. They're like, oh, this is like a hot trade. My wallet is pinging like crazy. I seen like 10, because there's nothing. You see like some of your favorite traders getting into the trade. You're tracking their wallets or whatever. They're all in. And then you just get so excited that you jump in. And then what happens? You're in drawdown forever. Still never recovered, right? And I don't know what this is. I haven't did research. I see Dex Pay, whatever. It looks like, you know, it could be something. It obviously started off super hype, but this is called top blasting. You do not top blast. That's emotional trading. You don't buy high and sell low. That's how you go broke. You buy low and sell high. That's how you make money in any market. Okay, it's basic economics. Do not top blast. Buy the dip. If you feel like this is a good opportunity, okay, you wait for a good dip. You know, let's say you got in down here, right? That's around 80K. And you got out here, you're up almost 2x. This isn't the best example, but you get what I'm saying. Buy the dip because you're so excited you thought it was going to go up forever. There's always going to be a dip. And if you wait for the dip, now you just improve your chances of making some money. Buy dips, especially if you have conviction, you know it's a good coin. Like a lot of people top blast because they just so emotional. Oh my God, it's euphoric. It's going to go up forever. We have $1 million runner. And then it just tanks. And that doesn't mean it's not going to be $1 million runner, but you just fucked your entry for no reason. And now you're trying to recover. Maybe you buy more here, but now you're over leveraged, you know? So be careful with how you manage your risk, you know, buy dips and you could always DCA in. So, and that's next. If you're trading with 5 to 10 points, don't be afraid to trade with a SOL. You don't want to over leverage, but you don't want to under leverage either. The worst thing is like when you got good SOL and you're getting in with like a 0.10, 0.15 and it's a runner and like you feel like you kind of did yourself a disservice there because you had the SOL, but you didn't have conviction or whatever. Like, you know, don't over leverage, but don't under leverage. You can always scale in on dips. So if you want, you could, you know, put in this example, you know, let's say you did top blast, but you only put in, you know, half your port that you want, 0.50, but then it goes down a lot. And then you could put your full leverage of your one SOL in. And now you averaged out your entry. So instead of a full top blast, your entry was up here, you got down here. Now this is called dollar cost averaging. That's DCA. When we say DCA in, I'm a DCA out, DCA in. That means you're just scaling in. Okay, you're scaling in to get a better entry. Because even if you did top blast, you could kind of average it out. But it's always better if you don't top blast, because even if it goes down a little bit lower, again, the whole goal is less risk. Guys, you don't want to risk. You don't want to risk. Always get a low entry. So don't full port means put your whole portfolio in. And then here's another thing. Never send money to anyone on Telegram for any reason. Sometimes you're like looking at the communities, you're seeing things. Maybe somebody wants a CTO and they're saying, oh, let's split the CTO and we'll pay DEX together and this and this and that. I'm not doing it by myself, blah, blah, blah. Like they're going to take your money and run. I know because I've been in the trenches long enough and it happens all the time. At a certain point, you're probably not even really going to be in Telegram groups and stuff. Like you could just focus on price and volume, but that's just one thing to take note of. And another thing, leave a moon bag. This is optional. I don't always leave a moon bag. Sometimes I just want to be in and out of a trade. But if you in a trade and you like it and you feel like you're going to have FOMO about it later, like just take 75% out. You know, when you sell, just sell 75% instead of the full 100%. So that way you took profits. You know, maybe you're up 2-3x, right? You took a good amount of profits and you leave a little bit of a moon bag. It feels good when that moon bag still runs because you believed. It's better than it runs and you already took profit and now you're feeling like, oh man, I want to get back in. Now you're top blasting again. And you're just moving backwards at that point because you give money back to the markets because you're emotional trading. So it's optional. If you don't leave a moon bag, don't double dip. And I'll add that as well. Don't double dip. If you get out, stay out. Because once you start double dipping, top blasting, the reason why is because it's emotional at that point. You're only getting back in because you feel like it's FOMO, fear of missing out. That's what FOMO stands for, fear of missing out. If you have FOMO, like you got to regulate your emotions with trading. You have to be cold, man. You have to be cold when you trade. All right, now here's another thing, fucking hold. If you have conviction in a bag, hold it. Like I've learned this the hard way. I have a whole folder of plays where I didn't hold and it ran up like crazy. Here's a 300x that I missed out on. And I 100% believed in it. And I was just emotional trading. I got into this trade and I bought very low. Look at my average entry, 300K. And I could have gotten faster. I top blasted and it dumped down to 100K. And I got scared. I got out. But then I bought back in because I had conviction. But I don't know, I just got scared. I was emotionally trading. When I got back in, I made like not even 2x because I gave money back to the markets when I did that whole selling and buying shit. And I was just too emotional at that point because it was too much of a rodeo because I didn't, one, wait for the dip. And then two, the dip scared me out. This was an easy play, bro. It was such an obvious play. This was some meta. This is a guy on poly markets that they put him away, and it was big news. It was like this big thing, and like I knew it was gonna run. It was so obvious. I saw a caller called it. RNG called it. He's a great trader. I don't know. I didn't have full conviction, I guess. Look what happened. This was a 300x. I didn't hold. Right. So I got in because I had conviction. I believed in it. Everything lined up. I understood the narrative, but I still got emotional. Just fucking hold. Don't put in what you're not willing to lose. Now, again, don't top blast. Wait for low entries. And once you're in, let your play out. And then do not gamble. Family, do not gamble. If you don't understand why you're getting in a trade, don't get it. If you're losing money in this game, it's because you're gambling and you don't understand it. You're going to make mistakes. You're going to have to pay your tuition like everybody else, but do not gamble. You could get addicted to even losing. Some people get addicted to because it's a lot of emotions that you feel when you're trading. You're up, you're down, even a small win feels amazing. You get addicted to those wins and you want to find another play and you just start forcing plays. And then you're just gambling. Why'd you get in that trade? Oh, I don't know. It just doesn't make sense. Don't gamble. All right. So when do you take profit? Always take initials on the way up. Once you're up 2x, take out your initials. Now it's a risk-free trade. And then from there, always at least try to get a 2 or 3x. I say here 3x because you should have conviction in your trades. There's no reason, if you're in the pump fund trenches especially, there's no reason why you can't catch 3, 4, or 5x's. Now, everybody has their own style of trading. A lot of times, I'll just jeet after 2x. And that's another word, jeet. You get used to that word. You're going to hear that a lot. When you jeet out of a trade, that means you jeeted. Like you got out early. That's pretty much what it means. You just got out early. Or you got out fast. Like you gave up on the trade. You had no conviction. Sometimes it's okay to jeet when you're trying to build a port, like I said. When you're trying to build a port, just book your profits. Get out 2x, 3x, 4x, whatever. But, man, if you're having conviction, bro, one of the worst feelings is you had conviction in a trade and you got it at 2x and it was like a 300x like I just showed you. That's the worst. Have some fucking conviction and hold your trades. But at the same time, it's a balance because you don't want to round trip. Another word is round trip. Don't round trip. Always book some profits. And I'm going to show you how to kind of balance this whole thing out because round tripping is when you don't G at all. You're up 2, 3, 4, 5x and you're like, nah, I'm going to get a 10x. Nah, I'm up $800. I want to be up $1,000. And then it goes to fucking zero. And then you end up negative because you didn't want to take your 800 because you wanted 1,000 specifically. You, my friend, just round tripped. That's called a round trip. You're up a certain amount, but you leave with nothing. It's round tripping or at a loss. Okay. I round tripped so many bags. Okay. So G, but don't G. if that makes sense. And I'm gonna show you how to do the best way to just mitigate that is just taking initials. If you're taking initials, you're never really losing. Or if you're up 2x and you take some of it and you leave a moon bag, you're never really losing. That's the best way to handle that. Now, when to place a trade, always ask yourself, is there value? Is there volume? And look at the volume video I made. Is there volume? Are there traders in? Are there other people in? Sometimes you could be first. If you really understand it and you know the narrative, that's cool too. But can you hold it without panicking? Is this something you feel like you can hold? Can you sleep on that trade? Are you still early or are you late? Ask yourself that, because that's going to stop you from top buys. Buy at a discount, right? Wait for the dip. Are smart wallets in? Did your wallet tracker ping like who's in, who's top holders? And what's the supply looking like? Is it good distribution? Ask yourself that. Is there good distribution? Look at the distro. What's the distro look like? Right? 37, boom, not good distribution. Sometimes there could be a reason why. Do you understand why? Okay. Then ask yourself, is it alpha? Then hold. Okay. Is it a derivative? Is it a beta? Okay, then scalp. Right? In and out. No alpha, sit on your hands. This is one of the hardest things to do because it's so exciting learning trading, addicting even. That's why a lot of people gamble and lose so much, because they're just like, they're getting in trades for no reason. They're not following rules. They're not disciplined. They're gambling. If there's no alpha, there's not a clear narrative, sit on your hands. You're going to know, and it'll build up more and more inside of you. You'll know when there's alpha. You can feel it when you're in a good trade. Like, you know, and it's not often. It could be a few times a week when you're in like real alpha. Now, don't get me wrong. You still make good trades following these rules, but especially in the beginning, especially if like you're strapped for cash or like whatever the case is, you really want to build your port and you're serious about it, you got to be a little bit more disciplined and sit on your hands more. That's the best thing that I could say. If you're having trouble keeping profits, taking profits, whatever the case, because even if you did find a great trade, you'll give it right back to the markets if you don't sit on your hands and wait for the next great trade. Sometimes you make more money by not trading, if that makes sense. So this is an example of a textbook play. This is a trade that I just took recent, and I got some alpha on it. I was in a VC voice chat, and the meta was streaming. People were streaming to make their project go crazy. This was like an IRL stream. He was in real life, and like they mentioned it in the voice chat. It was a cool idea. I already liked it. I started scalping in, DCAing in, but I got in kind of high. I got in kind of late. I didn't over leverage, so that was good because I was able to dollar cost average in, put in more bids as it dipped. As it dipped, what did I do? I was on the stream and I was just kind of doing more research. I was seeing their socials. I was seeing what they were about. They seemed pretty based. So I was like, whoa, this looks like a pretty good narrative. The meta was there. It was streaming meta, and I was pretty early. So as soon as boom, I 2x'd because I dollar cost averaged in. I 2x'd here. I started DCAing out, 25% out. Then I just held it. I went to the gym. I looked back at my phone. I'm up. It went another leg up. I took a little bit more out. Hit my workout, took a little bit more out. I saw it up here, took a little bit more out. Then I saw it dipping all the way down. And I took the last one out and I left the moon back just in case. Because I'm like, if they really stay streaming and they do what they were saying they were going to do, it could probably go to like 10 mil. But in this case, it didn't. So the moon bag failed, but I was already up like 4 or 5x on the trade. So this is a textbook. This is how your chart should look every single time you make a trade. You don't have to have that many buys. If I would have had a good entry, it would have been probably 1 buy or 2 buys. But scaling out like this, you see initials booked, pretty safe trade. Like I could literally move on. It either makes me a lot of money or it doesn't. Next, I could move on. And I made some money off of that. This was probably a few racks. So that's example of a textbook trade. All your trades should look like that. Screenshot that. That's a textbook play. That's how all your plays should look. You're in and then it's the best feeling, just booking profits, just riding the waves, right, as they go up. And that's why it's kind of good not to imagine I just full ported out at 2x. I would have missed out on 5x. But then again, I had conviction. So if I didn't have as much conviction, maybe I could have took a 2x and just move on. Sometimes that's the game too. You're going to learn what type of trader you are and what goes good for you, bad for you, etc. But that's the main idea, right? You want a textbook play every single time. And that's what that means. When we say textbook, the more you trade like that, the more you'll stay up forever. Because you could lose a few plays and it just takes one play to make it all back plus more. All right. That's what risk management is. So I don't want to drag it on too long, but I did want to give you some of the main sauce. This is a very, very important video. Hope you guys took notes. You know, write this down for yourself. You're going to learn this for yourself. Come back to this video when you feel like you need to just tighten up. All right. Very important video. So I'll see you guys in the trenches. Let's run it up. Shout out to Dev, and he's an FNF trading group. He's another top trader, and he's actually somebody I track and I follow him in one of his groups. And he actually put this out a long time ago, and I've always used this one. I had it my own, but this one was just like, I just like the way he put it together, like by the month. Now, basically what this is a trading sheet. The best way to get good at trading fast is knowing why you're getting into trades and just being more conscious of why you get into trades. Like every time you take a trade, put the date, put the ticker, how much you put in, how much you sold it for. Currency is going to be sold. You'll just go to file and make a copy. Once you make a copy, you'll have the whole thing here, allow access, and then you go back here and then you can see just kind of everything. And you'll see how much you're up for the month. You'll see your total profit, your total losses, ranges. Like he just had a little bit more information that I really liked, and your win rate. Okay, but you got to fill everything out. The date, the ticker, the cost, how much you sold it, and it'll give you your P&L, it'll give you your USD P&L, and then write a note. What went right? What went wrong? What you could have done better? Do this every single month. There's no way you're going to keep losing. You can only lose and learn the same mistakes so many times. Don't get me wrong. Like I said, in trading, everybody pays a tuition. Everybody pays a tuition. Like that's just the cost of trading. You might lose your first account, second, third, fourth account. Like I've lost tens of thousands of dollars before I started making money. It doesn't have to be that much though. You know, but a lot of people usually just blow an account, 2, 3 accounts. I started with a few thousand, lost it, a few thousand, lost it, and then I had to build myself back up. But journaling definitely is going to help you become conscious of what you're doing wrong or what you're doing right. So just make sure that you're journaling every single time you're taking trades. This is how I know somebody is serious. Like if you come to me and you want to learn how to trade better, like, and I say, show me your journal, you don't have one, like that explains why you suck. So just do it. So make one, you know, you have one for January, February, March, you know, and then there's just like your totals for the year. Like you, like I saw this quote one time and it goes like this: what you track grows. What you track grows. So track this, focus. All right, guys, I hope you got some value from that video. I'm gonna be dropping more content on this channel. Subscribe, like, you know the drill. Follow me on Twitter as well at King Montilla. DM me, engage. We're gonna be putting out a lot more content for you guys, so stay tuned. I'll see you in the next video.